Welcome to Fomo Consulting for your daily AMC stock analysis video on Sunday, May 2nd. Ladies and gentlemen, let's look at this week's battle plan. And I do have a price prediction at the end of the video, so stay tuned. The apes are winning, the diamond hands are winning, the retail investor is winning, and I do believe this will be a phenomenal week, and I'll show you why very shortly. If you find this video informative and entertaining, please like, share, and subscribe. It is a newer channel and I would appreciate the support. Let's get into the video. So as always, I want to thank everyone who has liked, shared, commented, and subscribed. It is truly humbling and it means the world to me. Thank you very much. So let's read a quote. I came from a real tough neighborhood. Once a guy pulled a knife on me. I knew he wasn't a professional. The knife had butter on it, from Rodney Dangerfield. I believe this is relevant simply because our opponent will really crank up the FUD this week. They're going to make the threats. They're going to tell you how AMC will miss earnings, how it's a terrible company, too much debt, 43 million shares are coming out next week, all the different tactics, short attacks, you name it. They're going to pull it, but at the end of the day, they are carrying a butter knife. They cannot shake the shares from the diamond hands, from the apes, or the retail investor. No respect, right? We get no respect. Quick review of Friday, absolute bloodbath, all three major indices down. Tech got hit especially hard yet again. I hope to see a better week. I think we all do. AMC certainly felt the effects of the broader market. So let's look at Friday's chart. Quick review. Overall, the normal rinse and repeat. Pumped in first thing at opening. Sold off. Slowly trickled down throughout the day. Found support at $10, which we absolutely own. And just pretty much bounced around that channel. We did close the week very, very importantly at 10.03, down 1.67. That we put an awful lot of calls in the money. So that was a fantastic way to end the week and sets us up beautifully for this week. AMC performed very similarly to the broader market, as you can see by the three charts of the three major indices. No big surprise there. AMC is a stock after all. A lot of mutual funds, ETFs have influence over it. So overall, very, very strong week for AMC. Looking at the current trend, we are in a bullish MACD crossover. Those that are concerned about the 4 red days, you don't have to go back very far to early March or so to find where we broke down below the moving average as we continued our ascent up. I do believe we will continue that upward ascent this week. Nothing to fear from my perspective, not financial advice, just my opinion. Again, looking at indicators, we are trending ever higher. The 4 red candles broke below the moving average. We did it again. I do believe we will recover. Earnings weeks are typically good, and I'll show you that very shortly. We are in, again, bullish MACD crossover. This is the channel that we pretty well traded in last week, highs and lows. We've been there, done that, traded in this channel quite a bit. I am anticipating, in my personal opinion, we will be in the upper part of that channel, if not breakout this week. After 4 red days, I know there's a little doubt that creeps in, but when in doubt, zoom out, right? We are still very much on the upward trend, very much on the uphill climb. Things are looking very bullish, and nothing has changed from my perspective. So let's look at the upcoming catalyst for this week, right? We could launch the rocket, who knows? We have the annual shareholder meeting, Tuesday, May 4th. Very, very important. We could potentially get that share recount info we are all anxiously awaiting. Earnings is on Thursday, May 6th. That is exceptionally important that it is after hours on Thursday, May 6th, late in the week. That sets us up very, very strong for the week, and I'll explain why shortly. NSCC 005 went into effect with the SEC. That's fantastic for the liquidity requirements. Other rules are pending. We'll see how the market reacts to that in this upcoming week, and as we inch ever closer to those actually being in effect. Box office numbers will likely come out tomorrow from the weekend. They should be very positive. Demon Slayer has just been killing it worldwide. Mortal Kombat's doing very well, and there's some big titles coming up in the near future. So I expect from a business perspective, we'll see some positive news from there. And who knows, between the annual shareholder meeting and the earnings meeting, a lot of news going to come out from AMC. Hopefully there'll be some major catalyst and possibly even a surprise no one is expecting. And look, it could be the week. Who knows? I do believe, based on the positive catalyst, not everyone is a diamond hand, right? Not everyone is an ape. Not everyone is a bought-in retail investor. There is a ton of money, I believe, sitting on the sidelines, a lot of interest, but there are people who are not going to tie up their money in AMC. But as soon as it starts heading upwards, whether that's $1, $2, $3, or more, you will see a ton of people buying in that are just sitting and waiting, just not tying up their money. So I believe that could be a huge catalyst for later in the week. So once again, reminder of the earnings. Make sure you sign up if you want to listen. Thursday, May 6th at 5 p.m. Eastern. Earnings estimates. Overall sentiment is revenues should be around the 150 million range. We are looking at a near $2 improvement from Q4 from an EPS perspective, which is huge. That shows this company is very, very strong. It is recovering. Revenues are improving. Profitability is improving. So I'm very, very excited. If we meet or exceed these estimates, in my opinion, look out. So what I want to do is walk you through the last 4 earnings reports and how the stock reacted leading up to and shortly after the earnings reports. So let's look at the Q1 earnings report from 1 year ago that was released on June 9th of 2020. Now, we all know the world was shutting down. COVID was having a major impact. A lot of fears in the market in that Q1 timeframe. The stock had not completely fallen off the cliff at that time, but it was the whole economy was shutting down at that time. So if you look at the top, I've got an orange bar. That's the date of the earnings report. So leading up to, there was a trickle up, even in a terrible economy, lots of fears around the around COVID, around shutting down. There were multiple green days leading up to the earnings. Earnings report came out. However, the day after, the stock popped. We were in a shallow but evident bullish MACD crossover area. I do believe even in that environment, this shows strength. But more importantly, let's move forward. So let's look at August 6, 2020, ironically on a Thursday. Very, very important. I'll remind you the Volkswagen Infinity squeeze was caused specifically by Porsche issuing an announcement on a Sunday that they were buying in heavily, increasing their position. Gave the shorts enough time to get out. Massive covering earlier in that week caused the Infinity squeeze. Shorts do not like uncertainty heading late into the week, which is why they usually hedge and try to get out, and why we seem to have such a fight on Fridays, right? So leading up to these earnings in August, again, middle of COVID, theaters were closed. Company is struggling, right? All the FUD and all the discussions around bankruptcy. However, we are, if you look at the bottom, we are in a bullish MACD crossover, bullish territory. leading up to earnings, all green days, albeit shallow. The day after earnings, the stock pops. We are still moving up on the moving average. So all of these indicators are very similar to where we are today. So let's fast forward. So zooming out, same time period, Thursday, August 6th. Orange bar is the date of earnings. We were trading relatively flat, and keep in mind, this is when the stock was trading in the high threes, low fours in that time frame, leading up to the day after. Stock absolutely pops, heads up very, very quickly in the days and weeks after, and it hit a high of $7.71. Again, if you look, bullish MACD crossover right before earnings, moving average moving up, earnings come out, it's a catalyst, right? So let's look at how it compares to now. On the left is our current chart. Again, moving average is still in bullish territory, shallow MACD crossover, that's bullish. You look to the right, that week we were at $3.81 as a low, and not too long after, a couple of weeks, we were at $7.71. That was a catalyst to move us upwards, even as theaters were closed, keep in mind. So let's look at how the stock reacted leading up to the earnings report on November 2nd. Obviously, a lot of red. It was trending downwards. We were in the $2 range. We were in bearish territory from a MACD perspective. All things look terrible, right? Let's zoom out. Let's look. So shortly thereafter, orange bar is earnings date, middle of COVID. Bullish MACD crossover, shallow, but evident shortly thereafter. From that point forward is a catalyst for the stock to move upward yet again. In just a few weeks, the stock went from $2 to $5. Again, theaters are closed. There was probably some enthusiasm around Wonder Woman and a few other things with limited capacities or whatever, but overall, you see how the stock reacted leading up to, but earnings hit, positive catalyst, and everything moved up from there forward. I found that to be very interesting. So let's look how that compares to now. So again, 4 red days, we are in bullish MACD territory. Look to the right, low of $2.11. Right at the date of earnings. Earnings come out, albeit, no business, right? Talking of bankruptcies and all these other things. No doubt FUD was involved. Still a positive catalyst the day after, and it moved up to $5 before the holiday. So again, very, very positive around that. So let's look at the Q4 earnings report that we just heard, a month and a half ago on Wednesday, March 10th. Again, this is very relevant. So leading up to the earnings, we are in a shallow, bullish MACD crossover. Not terribly impressive, but bullish nonetheless. Moving average heading up. We're a little bit flat. Go figure for red candles after a green candle. Earnings come out, stock pops, right? And moves all the way up. This is where we moved up the week after to our recent high of $14.54. Again, very, very relevant. But if you look at the week, we started at $8.53 as an opening. We closed the week at $11.16. Again, a very bullish week after a fairly flat week the week prior, and it really set us up for about 2 weeks of really positive price action. So let's see how this compares. So on the left, that's our current, right? Shallow MACD crossover, bullish territory, moving average moving up. broke below the moving average on the red candles. Let's look to the middle. Did the same exact thing week prior to the March earnings call. 4 red candles, 2 below the moving average. The following Monday, we popped, headed up, and we never looked back for about 2 weeks. I do believe that's very relevant. It's zooming in on the right side of the screen. Again, you'll see the earnings date and a little closer perspective of what happened, which is very relevant to what has happened last week and what I anticipate this week to look like. So I want to show you a very interesting viewpoint of regarding earnings. So this is the Ortex chart for 1 year. This is price action only and volume. So you see the volume at the bottom, obviously the baby squeeze in January, huge volume spikes, pretty much non-existent for the year prior. So let's look at this. The gray bars represent security lending volume, borrowed share volume. So if you look and try to find the patterns, every time there's a price spike in general, there's a volume spike in borrowed shares. I think that's very relevant, and I'll show you why. So let's look at the last, let's say 3 months or so, 4 months. Before the baby squeeze in January, we were around, give or take, 50 million borrowed shares. We are now at 150 million borrowed shares. We are 3 times as many borrowed shares as before the baby squeeze. Very, very relevant, and I'll show you why. So this is a zoom out. So what you're looking at, let's go to the left. So green arrow, price is increasing, right? The orange bar is the date of earnings, the earnings report. As you can see, price is trending up before earnings. They borrow a bunch of shares. They short it way down, right? Next, let's look at the earnings report that came out in August. Price is trending up. Earnings report comes out. You get a spike in the borrowed share volume. They short it now. Earnings report comes out. Prices is already low. They borrow a bunch of shares. Price pops right after earnings, as I showed you. They shorted right down shortly thereafter. So here's the March earnings report. If you notice the difference in the amount of borrowed share volume for the Q4 earnings, they are fighting this tooth and nail. Just look at the volume based on that and the price action that got up to around $14 shortly after the last earnings call. So let's look at this. This is a little closer inspection. So the earnings is on your left. This was March 10th. Price action moving up, week leading up to. Earnings come out the week after. You certainly see some covering, as indicated by the short interest trend lines. You can see where they exited their positions, but immediately jumped back in to begin reshorting it, and they've been shorting it ever since, as indicated by the uptick, major uptick in the trend line and all the data regarding short interest. So if you look on the right, you'll see where we are today and what's expected around the earnings. If you look, there has been a downward trend over the last few days in short interest, free float on loan percent, shares on loan. I believe that they are preparing to start at least partially covering tomorrow and possibly Tuesday, because again, they know what's coming They know these two major catalysts. They know that they cannot get caught with these shares because this could squeeze any time, and I do believe they're going to try to cover, and I believe that will start as early as tomorrow. So again, a different perspective. Yellow line or yellow bar on the left shows where the highest price point we got at $14.54. If you look where it matches the estimated short interest, the price ran right up to where the short interest was, right? They exited their positions immediately, immediately borrowed more shares almost simultaneously. On the other side, as the stock cooled off, they began shorting it down, and we've been fighting that ever since. But the two left-hand yellow arrows, look at the amount of volume, bar after bar after bar after bar. If you look on the right, look at the scarcity of the volume. I believe that is exceptionally relevant because it ties right in to the utilization percentage that we are at now at 100%. If you look back when we were at $14, we were in the low 90s. They had a lot more firepower. They do not have the firepower, and I'll show you why. This is over the last couple of weeks. This was Monday, the big green bar in the middle, when we got up to what, 12.24, I believe. In that range, the yellow bar is the 100% utilization trend line. The gray bars are the borrowed share volume. The scarcity and the magnitude of which they're able to borrow shares is fizzling away very fast. They do not have the firepower to hold this down much longer, in my opinion. They did their absolute best this week. I believe the broader market also assisted them with that. But leading into earnings this week, I believe is going to be exceptionally bullish for us. Just a quick recap of last Friday's information. 398 institutional owners, one more bought in, increasing positions daily. It's ridiculous. We own nearly 80% of the company. Volume was very, very low, and that's simply, I believe, because of the broader market and also the 100% utilization. Short shares available, 150,000. Short borrow fee, 15.03% on Fintel. Believe that if you want. The cost to borrow fee on Ortex is 13.58, utilization 100%. Days to cover is incrementally moving up, and that is huge for us. 1.24 on Ortex, depending on how you calculate it. My belief is we are in the 3 to 4 day range. Shares on loan going down as shown by the trend line. Percent free float on loan going down. Estimated short interest of free float going down. Reported short interest going down. I believe everything is setting up for them to start at least partially covering based on their anxiety around the potential news of this week. And I believe our week could be phenomenal. So let's look at the battlefield for this week. I believe overall the battlefield would be between $10 and $12. The calls are on the left, puts are on the right. Open interest on puts is 10,000, a little over 10,000 at the $10 strike, nearly 15,000 at the $10 strike on the calls. As always, that will be a very key level. We need to hold support. You get up to the $12 strike for the calls, 14,000. More importantly, if you look at the put side, even at the 9.58, there's not a ton of open interest as of right now that I'm able to find, which I think bodes very, very well for us. I quite frankly think they are scared to death of this week. I believe they are going to wait and see, which again, I believe is going to play out very, very bullishly for us. Overall sentiment in the options chain, very bullish, 2 to 1, where it's been for several weeks. IV still relatively low. Everything's looking good from that perspective. And as always, I have skin in the game, 4,800 shares in my Fidelity account, another 600, I believe, in 30 in my Weevil account. I'm in this. Yes, I bled money last week just like you, but overall I could not be more enthusiastic going into this week. My bold prediction for this week by Friday, based on the various catalysts that we have in front of us, based on the fact the shorts I believe will cover, they will not engage in a week of uncertainty around the annual meeting, around earnings. I just believe they will sit on the sidelines for the most part this week, which will only bode well for us. I believe it will be an exceptionally bullish week. If you go back and look over the prior earnings weeks, on average, there's about a $2 rise around the time of earnings and shortly thereafter. You go back to March, you can clearly see there was about a $2.50 increase in price from time of earnings and then the week prior, or excuse me, the week after. I am anticipating a very green week. My personal price target, not financial advice, do your own due diligence. I think we'll end up between 12 and 12.50. My hope is that could possibly cause some sort of gamma / short squeeze. If earnings come out or there's some major news comes out, DTC, SEC rules come out, all we need is just a little more catalyst, but I believe this week will be absolutely huge for us. Last quote, we can't control the wind, but we can direct the sails. I think this is very relevant because no, we don't have the tools, we don't have the technology, we certainly don't have the money. Our opponents have, but what we can do is buy, we can hold, we can press the price up, and we can hold the floor at $10, which I think is exceptionally important. We control the company. We own nearly 80% of this stock. We control the sales and how this company goes. So as always, I want to thank you for watching the video. If you found it informative and entertaining, please like, share, and subscribe and comment. I always love the comments, but as always, I hope your life is full of green candles, and I certainly look forward to a green candle week. I'll talk to you soon. Bye-bye.